Hi, I'm Julian Stevens, Managing Director of Sovereign Metals Limited. Sovereign has discovered what is likely to be one of the world's largest rutile deposits in Malawi in Southeast Africa. Rutile is a titanium mineral, and it's the purest natural form of titanium, and its main uses are in pigment and in the welding industry.
Hello, Julian. Good morning. Oh, good afternoon to you. You're in Perth, aren't you?
Good morning to you, Matt.
Right, and I hear you've also just moved house, so you're in all sorts of world of hurt and pain at the moment. So thanks very much for coming on our show. I really appreciate it. We've not met or spoken before. Story's new to us, and I'm excited about it. Really excited to hear the story.
Great, thanks.
Well,
thanks for having me on.
No problem. So let's go back to the beginning, because like I said, I haven't really heard of the story. Like a year ago, you were at 20 cents. You're at 64 now. Yep. So it's been a good 12 months for you guys. But I want to know where this thing started. So how long have you been involved?
So I've actually been involved in Sovereign since 2011, when I was actually one of the original vendors of this large ground package in Malawi to Sovereign. And at that time, we were looking for graphite. So we took the company through a number of graphite deposits, and we actually took one to a PFS, and in 2018, during that time, we started getting sniffs of rutile in the area, and really made this sort of large or very large rutile discovery in 2000, very early last year in 2020.
Okay, so hunting graphite originally, and did you say you've done you had completed, or you're in the middle of
PFS on a graphite deposit that we found there, actually close by to our rutile deposit.
So that's still in the bag somewhere? Still
in the bag, correct.
Okay, but you've segued over into rutile, but because what? More profitable, bigger market, you think you can win?
Just look, the market at the time, the market was a little bit difficult for graphite. It was a little bit difficult to raise money, and we found this fantastic opportunity on our ground package in a probably a really strategic industrial mineral, and that's actually in significant supply deficit. So we sort of segued across there. But as you said, we are still looking to do something with our graphite projects.
Okay, so where are you with regards to the rutile? Because I obviously saw the press release comes out and said you've made one of the larger discoveries globally for rutile.
Exactly. So I said we discovered this very early last year. So we've spent the last 18 months really drilling out this really large deposit. It's mind-boggling, actually, the size of it. At the moment, we've defined rutile mineralisation over around 114 square kilometres. But the resource, we've only done enough drill density in about 43% of that area. So that 43% is what we've conducted the inferred mineral resource estimate on. So there's still a lot more to come. If I could show you some maps, I will do after and obviously check out our announcements. You will be able to see that very, very clearly. So at the moment, looks like it's the second biggest deposit in the world, but everyone can see a clear pathway to it being the biggest rutile deposit in the world.
Okay, so there's going to be lots of generalists and new people coming into the mining space. There always is. They won't necessarily understand what it is that you're aiming to try and do. So saying rutile used in pigments. And you made the decision, board level, to segue over to that. So tell us a little bit about the market that you're telling us is now in structural deficit. Sure.
So the market really is the titanium market. And so this is a titanium feedstock mineral. So the key products or the key sectors of the market are the pigment industry, which is 50 to 60% of the rutile market. So that's titanium pigments, really meaning paint, other products like toothpaste, even cosmetics, these sort of things. So and then about 30% of the market is the welding industry for natural rutile. That goes into welding flux. That's the sort of coating on the welding rods, and about 10% or so goes into titanium metal, which goes into aerospace, some medical uses, synthetic joints and these sort of things. So that's really the broad breakup of the market. Now, rutile is the highest purity natural form of titanium, and it competes at about 95% titanium dioxide in nature. And it competes with another mineral called ilmenite, which is around 50% titanium dioxide. The pricing of these two different minerals is hugely disparate. Rutile goes for around $1,200 a ton on contract price, if you like, at the moment, but ilmenite is around $200 to $250 a ton. So significant difference. That the difference in pricing is because some applications can only use natural rutile, for example, welding, and there's much less waste and or carbon dioxide units emitted to the atmosphere by using this pure form or very pure form of natural titanium, being rutile, over over its poorer cousin, I suppose, ilmenite.
So, I mean, what's the split between? Well, I know it's kind of early days, but have you got a sense of the split between rutile and ilmenite with your deposit? Okay,
zero ilmenite, all rutile. All the value is in the high purity rutile. Yes.
Okay. So I guess that's why we saw the comparison between one of your peers, Base Resources, another Aussie company, in there.
Yes.
Okay. So you're saying you're better than them?
I wouldn't say we're better than them. We've got a slightly different project in that all of the value in our project, or the vast majority of the value in our project, is rutile. They have a mixed bag. They do have a significant portion of rutile, but they also have ilmenite, and they also have the other mineral that often occurs in these sort of deposits, being zircon.
Right, and obviously they're cash flowing at the moment. But so tell us about how you are going to advance this project forward. So we've got a sense of where you are today. How much cash have you got?
Yes, we've got about $8 million in the bank today.
Right,
Aussie, of course.
Where does that get you to?
That'll get us to at least to a PFS.
From here? What, a completed PFS?
Yes.
Right. Okay. And then what?
And then we'll go to we'll start looking for offtake agreements, and we'll go to a DFS, then funding and construction and production.
I said PFS straight to DFS because it's quite simple flow sheet.
No, so sorry, I jumped a step. We've kicked off a scoping study right now.
Got it.
So we are going full bore at a scoping study. There'll be some announcements around progress with that into the market in the next few weeks. So we've got a team together there, and everyone's starting off on their work packages. We are currently targeting November for that, and for release to the market. A significant portion of that, a significant component of the work program there is a drill out of the deposit. The deposit at the moment is in the JORC inferred resource category, and we need to get that up to indicated so that can form the basis of our feed for our scoping study.
Right, and then you're going to need money. So when do you come to the market for that? Before the PFS is complete, or after?
It may be sometime before the PFS is complete.
Right,
a little while from now, though.
Yeah, no, I understand that. I tell you why I ask, because you've done well. You're up 3 times in the last 12 months. That's good. Shareholders happy. But people looking in now going to want to know the kind of the path forward. But I'm looking at your press releases. You don't give much away, do you?
In terms of?
Well, it's in terms of you're not very marketing oriented. It's just here are the facts. Just make it.
Look, I think we've. It's kind of, the commodity kind of sells itself,
What does it? What do you mean by that? What do you mean by that?
Well, I mean the commodity sells itself in that it would be fair to say, extreme deficit at the moment, and there's, in the foreseeable near to medium term, there's no way that gap in the market is going to be 100% filled.
Okay, but you've got to tell people that, right? So, what is the total size of that market, dollar terms, today?
Sure. Look, the total size of the titanium feedstock market is around $15 billion. And rutile goes into a high grade portion of that market, I suppose, which is between $4 and $5 billion.
Right. And so what happens in a market like this? I mean, actually, here's one thing. So what's your background? But before you were hunting in Malawi for graphite, what have you done?
I've actually got I'm a geologist, and I've got a PhD in gold. So since I finished my PhD in 2003, however, I've become a bit more of a generalist. So I've looked at a lot of, I guess, different deposit styles, uranium, niobium, rare earths, graphite, rutile, other mineral sands, etc., base metals.
So you can dig it up, you're hunting it.
Yeah, I've pretty much looked at anything. I'm not a petroleum geologist or a coal geologist, so I generally avoid those sort of things. But any mineral, however funky and it might be, generally keen to have a look at.
And I've seen Ian Middlemas on the board there, but who else? I think most people know. Who else is involved?
So we've got Mark Pearce on the board, who you may have heard of as well. And Ben Stojkovic, you might have heard of there in London. He's our London-based director. He's a mining engineer.
Right. And what do they do? I mean, he's actually running this thing. He's like, Ian's got a few things on his plate, right? So he's actually driving this thing forward.
Oh, I'm driving it mainly, and Ben's assisting me on that side in London. And as I said, Ben's a mining engineer, so he's assisting me in, assisting with the studies, etc.
Right. Okay. So
not on a full-time basis.
Not on a full-time basis. Okay. So
no, I'm obviously full-time basis.
Yeah. So the G&A, there's a question. I was like, in the last 12 months, what's happened to the G&A?
In terms of spend, yeah, it's been going up. I'm building. The team has been building over the last 12 months, and in particular over the last couple of months.
Meaning what? You've had more relevant people for the stage of development that you're at, or
correct.
So people getting paid more. I mean, what's that mean?
No, not exactly. We're bringing on more headcount and a couple of key positions. We're bringing on a new country manager for Malawi because things have gotten much bigger, and our current country manager will be moving to a technical manager position. He's a geologist like me. And we're starting to build an owners team here in Perth. One of a key position there was head of development, and where we've employed an experienced mineral sands metallurgist in that position. Okay,
so if technically, rutile, relatively easy flow sheet, relatively easy technically to mine. So that's not too complex, but I assume you've got the relevant people or skill sets in-house for that. Yeah,
we have in-house expertise now. Yes.
Okay, and then with regards to the market, because you talked about contracts earlier, you're going to need to start demonstrating that within the sort of next 12, 18 months.
Yeah, I think about 12 months. I think probably during the PFS we'll start getting down some potential MOUs that we will be looking to convert to contracts.
Okay.
But that being said, we have had significant contact with potential off-takers, meaning obviously rutile buyers, consumers.
Do I need to know which country they're from? Can I guess?
You can guess.
I'm getting, because there's obviously a massive market in China, but are you going down that route? Because I'm just intrigued by, I'm intrigued by the dynamics obviously between Australia and China at the moment, but also sort of globally there's a sort of much more combative tone in terms of mineral security, etc. So how's that affecting your thinking?
So for us, we are kind of lucky in that China doesn't use a lot of rutile in general. They use the cheaper ilmenite, and a lot of their pigment plants are set up to use the cheaper ilmenite. So our rutile, the majority of groups we've spoken to being in the pigment sector and in the welding sector are North American, European or Japanese.
Gotcha. Okay. Right. So is there anyone in-house with regards to experience in setting up and writing those contracts, getting those contracts, or are you doing that through a trading partner? I mean, in which case, is your margins being affected in any way, shape or form? I mean, How are you approaching it?
No, a little bit too early for that. A little bit too early. We're 6 months away from starting that process. In the meantime, we're talking to these groups, keeping them warm, giving them samples, and in fact, they're on the phone. You know, they're picking up the phone more to me than reverse. You know, simply because this market is in supply deficit and they're desperate for secure supply.
Right. Okay. So you're just going to, so it's easy for you. You're just going to like sell into contracts, and that's as complicated as it needs to get for you. It's really sort of simple.
I imagine it would be a mix.
Right. Okay.
I imagine it would be a mix of say 60 to 80% contracts and 20 to 40% on short term. On spot.
How do contracts work then? I mean, obviously they're fixed term contracts, but do you sign up for a 1 year, 2 year, 3 year contract, or is it volume? How's it work?
We're seeing generally sort of 2 to 5 year contracts.
Okay.
Yes.
So how do you negotiate that? Given you said that we're in structural deficit, therefore prices usually go up in moments like that. So how do you? I'm just intrigued in the negotiation bit, because that's where margins get shaved or made. So.
Yeah, no, of course. Look, I would. We haven't, the project's early stage. We haven't got to be fair. We haven't got right down that path yet. Okay. I will be bringing someone on at the right time to assist us with that. Okay. But it's just too early to talk about contract negotiation. Yeah.
I'm just intrigued by who's on board and who's not. Okay, so it's too early. Come back and tell us about it when they come on board, because that's intriguing to me. When companies come on and make claims about inserting themselves and taking 5%, 10% of a global share, not that you have,
sure,
but people do come on and say that. I'm intrigued. Well, tell me how. And they usually can't. So let's go to Malawi then. So Malawi, we know Malawi a little bit. We've had the odd Aussie company, I think Lotus Resources on here operating in Malawi. There's a few others. How are you finding doing business there?
Oh, look, Malawi is a fantastic place to be. I've actually been working in Malawi for 16 years on a number of projects before Sovereign, and then obviously on Sovereign for the last 10 years. It's a small Southeast African country. British colony. English is the official language. Really, really friendly people. Agriculture dominates the economy. The government's very, very aware and putting in significant effort to diversify the economy at the moment. And one of the economic sectors that they're looking at seriously is the mining sector. So that all being said, we've had fantastic support from Malawian government over the years, and now more than ever, they're really throwing their weight behind us and this project. So we've got fantastic support there from them.
Right. So I assume, is it English, rule of law, good mining code,
yes,
et cetera, et cetera? Okay,
yes.
Fine. On the resource, obviously you put that out. I mean, do you need to do any more work on that between now and delivery of the PFS?
Absolutely. We will be doing two things on the resource. One is doing a infill drilling program to bring a significant portion of that existing resource from the inferred resource category to the indicated resource category, so that we can use that in our scoping study. And the second component is we will be expanding our drilling and trying to bring more tons into the overall resource as well.
What can you tell us about the actual ore body? Because I haven't actually had a chance to look at that. So,
sure, I can tell you that it's all near surface. It's really vast in area. As I said, at the moment we've got about 114 square kilometres of mineralisation. The really interesting aspect about this deposit, Cassia, is that all of the highest grade mineralisation is at surface, like right from surface, pretty much in the top 5 metres. So really, really very easy to access this. And we're talking about grades of, between sort of 1.4% and 2%, up to 2% in this near surface area. So we will be able to target that high grade, really early on in the mine life, and that will assist us in being able to get our capital paid back as early as possible.
Right, and you based it on, so again, with the resource, you based it on what? How much work has been done on whatever the resource is based on?
So we have done approximately 500 drill holes in the resource area. They've been drilled to generally an average depth of only about 12 metres. So that's at about 400 by 400 metre spacing, so very wide spacing. But this mineralisation is so consistent, we can drill it at that quite wide spacing and still achieve a JORC resource. So the other areas that have not been included, as I said, 43% of that 114 kilometres squared is currently in resource. The other areas that have not been able to be classified in the JORC resource yet have been drilled at something like 800 by 800 metres. So we need to go in and a bit closer and do some more drilling in those areas to get that into the resource.
Okay, what's somebody used to send a question in on using the phrase slag rutile. What is slag rutile?
There are two products that compete with rutile in the market, in the pigment market in particular. One is titania slag. So that is ilmenite that has been smelted to produce what is produced when you smelt ilmenite is a pig iron or iron and titanium dioxide sort of concentrate that grades about 85% TiO2. So that can be used for pigment production. It's kind of approaching the TiO2 grade or titanium dioxide grade of rutile. And the other product is called synrutile. Synrutile is basically a ilmenite that has been acid leached of its iron to bring up the TiO2 content.
Right. So the 15 billion number you gave me earlier is what includes what? Is that just pure?
It includes it includes all ilmenite, synrutile, slag, and natural rutile.
And I'm assuming pricing falls away for each of those, does it, compared to what you're talking about? Right, okay. So
correct.
What percentage of the 15 billion market would you be feeding into then?
That sort of 4 to 5 billion
Got it.
segment.
Okay.
Where it's the high grade feedstock component of the market.
Got it. Okay. So you're 4 to 5 billion. That's the actual target market that you were going for. So
exactly.
So how many competitors in there? Who are you competing against? Where are they supplying from?
Sure. You're competing against companies like Iluka, Tronox, etc., mineral sands miners, Rio, Kenmare, Base, etc.
Okay, but so I get there's a deficit potential now and going into the future. You're saying, is it possible for any of those competitors to ramp up to increase their production? Because obviously they're feeding into the market as they need to at the moment, because I guess they don't want to be in oversupply, drive price down. So how do you interact and how do you insert yourself into that ecosystem of $4 to $5 billion?
Sure. So the first thing is a component of that $4 to $5 billion is natural rutile, and a component of that market is synrutile or slag, the upgraded products, right?
Got it.
So natural rutile, is the preferred feedstock. It's technically preferred because it's more pure and you produce less waste when you're making it. You use a lot less energy and you produce a lot less CO2 or carbon dioxide units. So it's technically preferred, but it's more expensive than those cheaper than those lower grade feedstocks, synrutile and titanium slag.
Okay. So if that the 4 to 5 billion includes those, again, just in terms of the pure, I'm just trying to narrow it down. I'm trying to understand the size of your market that you're going into. So what is that then? It's
4 to 5 billion. We can take market share from those other products, and we will because there's such a shortage of natural rutile in that high grade chloride feedstock market.
Okay, you said it's preferred, but money talks. Money talks, right?
Of course.
If something's significantly cheaper, like whether it be the syn or the slag,
correct,
some users are going to be tempted to just stick with that because it's kind of good enough.
Correct.
It's not the best,
it's not
good enough.
Correct. It's not a binary choice. Actually, many of the pigment processors will use 20% rutile and 80% slag, or 30% rutile and 60 and 70% synrutile, or something like that. So it's a mix. They put a blend in and they balance their economics, their plant economics, with other factors like environmental factors, et cetera. And, as you know, that is becoming more and more and more of a
Oh, we're
theme.
getting there. I want to get there because I'm interested in that. I know we said you're not at that stage where you're on contracts, but you've got to understand what you're building into, right? Where, either the sin and the slag is cannibalizing your potential market or you're going to cannibalize some of their market. And I know there's blending going, and that's great. That's the way it is, right? So do you guys need to do a better job on the marketing because of this kind of green component? I mean, can you honestly say, hey, we're a little bit greener than those guys, you should be using us? Because the big funds are getting upset if your carbon footprint is too big. I mean, again, how do you play that? What's your understanding
Absolutely. We have begun some, I guess, quiet marketing on that. And if you look at some of our recent announcements and in particular presentations, you'll see that we do have a slide on there that highlights the, I guess, environmental benefits of using rutile as opposed to the upgraded products in rutile and titanium slag. So, absolutely, it's a big. We have started and we intend to sort of ramp that sort of marketing up over the next 6-12 months.
Okay. Your grades are good, so I'm going to assume you're going to come out eventually and tell us that your margins are good too. So I don't necessarily want to go there yet until you're ready to talk to the market. But I do want to talk about your share register at the moment and how's that changed over the last 12 months. Are you getting more institutions in, and if so, who?
We are. In particular, we have Sprott on board. They have been great supporters, backed our last 2 capital raisings, very well, and brought some of their clients in as well.
Sprott out of where?
Out of North America.
Right. Okay. So are they there? What's their equity position?
It would be maybe 12%.
Okay.
They do. I'm not sure exactly today, but they do. They do buy on market, etc. as well.
Okay. Interesting. And who else have you got on board?
We have a large component of German investors. Actually, about 30% of the register is in Germany. So that's been great. They're great shareholders and generally tend to stick. We also have management and directors and some of my vendors are at around 11% at the moment, and a sort of group of high net worths that generally follow Apollo Group stocks and have a relationship with Ian, our chairman. About another 15, and the remainder would be general free float
retail. Okay, interesting. Okay. Hey, well, look, thanks for the run through. I just wanted to kind of hear the story because it's getting sort of a little bit heated, and I'm sort of keen to talk to the different players out there, understand how they're coming at it. So appreciate your time today. You better get back to moving house properly or unpacking boxes wherever you're at. Unpacking. Yay! So much fun. And stay in touch and let us know how you're getting on. Okay.
Thanks for having me on. So just a reminder, here are the things to look out for the next 6 or 12 months. We'll be having a resource upgrade, as I discussed, and a scoping study targeted towards the end of the year. And our pre-feasibility study will be hopefully in the first half next year.